Welcome to Cyber Bulls, everyone. There's a major sentiment shift happening right now for both Tesla stock and business. For the first time since 2022, more than half of Tesla shares are now in the hands of institutions. Just in the past few days, we've got Piper Sandler recommending to buy Tesla stock before the 10/10 robotaxi event, and Morgan Stanley and Baird putting Tesla in the overweight category. At the same time, traditional auto manufacturers are struggling. We'll show you what's happening. So we've got the bulls here with us. We got Tesla boomer mama, the queen, Alexandra Mertz, Jeff Lutz, also known as Mr. Incredible, Xander's guy, the Froyo tycoon, and options bull. And joining us this week is Matt Smith, the financial bull, and our good friend Christian Valente, the momentum bull, the OG cyber bull. Welcome, everybody.
Hi,
hey,
Herbert.
what's up, guys? Good to be here.
Let's start with the big whale investors because it has a change that's happened. You guys can tell me if you agree or don't agree that large institutional investors seem to be now changing their tune. They're agreeing with energy, they're agreeing with robotaxi, and they're starting to say the right things. Alexandra, you had this post recently. You were getting questions concerning the institutional ownership of Tesla as of the end of Q2, and you think it was increased. You went and researched it, and this is what you found. Tell us what you're seeing here.
Perfect. Yeah, that's the right slide. Thanks a lot. So depending on the source you're asking, being Fintel, Yahoo Finance, or NASDAQ, you get different numbers of how many shares were within institutional ownership by the end of Q2. So we're talking about purchases of shares between April and June 2024. And it clearly increased by 79 billion shares. If you pull it up again, I'll have the exact number, 79 million shares. Exactly, there it is. So what was interesting is that from three sources we had three different results, and we're trying to find out where that was, and we got to the conclusion. NASDAQ very clearly in their methodology does not put up and does not take into their calculation any asset manager which has less than $100 million assets under management. So these are just ignored in the NASDAQ statistics, and that's why we see less of them. But even if we compare NASDAQ Q1 to NASDAQ Q2, we see an increase as well. But again, it's not a full sample. It wasn't a full sample at the end of Q1. It's not a full sample now. So the Fintel one seems to be the correct one. I don't know what Yahoo Finance does, but that seems to be too approximate. So if you look at the Fintel numbers, we now have 1.6 billion shares in the hands of 4,249 institutions, and they take into account all these smaller asset managers as well. So this number is up by the 79 million that we just said, 2.5%. Again, this is as of end of June. Now, do remember, actually, end of June was the first time we got the confirmation that energy had doubled the deployment, had a constant margin, and became of interest to these fund managers. So I expect this actually to increase. Now, why does it give me still a little bit of a bellyache? Well, we now have half of the Tesla shares in the hands of institutional investors, 50.2%. That means Elon and other insiders have about 13%. That means retail is down to 37%. I don't like that, but we'll have important votes still to come. It just means institutionals are increasing their hands on Tesla, but it is what it is. You can't prevent them from purchasing shares. They obviously have two motives. Either their index funds are growing, which is the case for Vanguard. I looked particularly into Vanguard. And so just by typical arithmetics, the fund grows. And so they have to buy all the different stock that are in the fund. And that's increasing the Tesla positions, but also actively managed funds are increasing. As you know, ARK is now close to 15% in the RK fund. So they are all at the highest limits they can go. They don't currently increase anymore because they're already so high. But people are very bullish, and the institutionals are coming through now. Yes. Also, do remember that is the first time for the last 2 years since August 2022 that we are back to the 50% institutions. We had that phase end of 2021 all through 2022 where they had about 50% or a little bit over it. Now we're back to that.
the company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. They enjoy listening to bears.
Looking for the red flags. You're supposed to react.
It's just worth reminding people how big this upside opportunity is.
Thank you for that. So we also had Piper analyst Piper Sandler saying that you should buy Tesla stock ahead of the robotaxi event in October. They have an overweight rating of 300. Same thing, Morgan Stanley just came out with this a few days ago, saying that Tesla and NVIDIA and others are part of their top pick. Baird is back there again. So let's ask you, Christian. Used to be a bear. Are you switching your sentiment as well for Tesla, or what's your plan?
Yeah. I wouldn't classify me as a bear. I was neutral. I think Tesla stock right now, if we're in a bull market, I think Tesla could do well. But like I said before, I think 1010 is going to be huge. I think something needs to be revealed there that really gives a lot of investors confidence in, either a robotaxi is, coming over the next year, something, solid, for me anyway, for me to get heavily back in, or something to the effect of, another model that's going to be, down the road, that's going to be even more mass market than it is even now. Like it's really mass market now, but like even something more than that, I think it would get like Wall Street really excited to own the stock, knowing that they're going to have a product that's just going to be like night and day better than anything you could get for that value and that price. So I think 1010 is a huge moment for the stock. And I don't know if it'll move it, dramatically after, because these events usually don't, but I think it could go a long way in instilling a lot of confidence in the stock while all these other things like humanoid robot and FSD slowly progress. The car business stabilizing, which it is now, I think they're starting to grow again and getting their feet with energy growing. I think that could be a nice tailwind, and I think it could kind of hold the stock here and maybe lift it towards 300 towards the end of the year, definitely.
What? 300 by the end of the year? Jesus, you started off saying you're realistic.
If we're not in a bull market, then Tesla's valuation, like a lot of other ones, would get hit hard. And if we get the R word anywhere near Tesla stock, it's going under 200.
Okay. Wow. That's a big news. I'm going to ask the same question to Matt, Jeff, and Xander. So do you guys see a sentiment shift? Is that correct? The thesis of the show? There's a sentiment shift for both the stock and the business. Let's start with you, Matt.
Yeah, I mean, I think there is a bit of a sentiment shift. The kind of extreme negativity that we had going into Q2, like Alexandra pointed out before, I think is accurate. It's just kind of funny to be talking about a sentiment shift and people getting more bullish on a day as we're recording when the stock was down 5.5%. So I think we kind of need to take all this with a grain of salt. My sense is I'm extremely bullish on autonomy and the whole robotaxi business model. We were just doing some modeling today actually on that, and the cash flow potential, the margins are so huge, but the market clearly doesn't believe it yet. At least it's giving it a pretty big discount to the kind of probability or timing of when that might happen. So I think the robotaxi event can be a nice catalyst in making that more real. But I'm skeptical that the market's going to suddenly kind of wake up and get it, and that we'll have necessarily the march to 300 by year end, unless it just becomes more clear through more people trying the software, or if Tesla's able to release any statistics around FSD take rate or something like that. Some kind of more solid meat that can enable the Wall Street analysts who love to be conservative to kind of latch onto a higher price target. I mean, even the Piper Sandler target of $300, and like they talk about some value for robotaxi in there. Like if you believe in the robotaxi business model, like you sort of need to have a price target higher than $300 is my mindset. So there's just a lot of conservatism, and I think what's happening is we've got like an expected value that's being discounted by a probability of Tesla not achieving anything significant here.
Interesting. Okay, Jeff.
I think Tesla needs to make a connection, and there's a missing connection between the forecasted production next year of 50% greater than what they entered in 2023, which was 1.885 million. They forecasted a 50% increase. But everybody's asking, where is this going to come from? You have the macro auto market slowing. You still have EVs growing, by the way, inside of that, but you have the macro auto market slowing. So I think Tesla needs to make that connection. And I think the 1010 event is part of that. Do I think you need a robotaxi date in terms of the network rollout to fully close that connection? No. I mean, that would, I think, as Matt said, take the valuation into a different level. But I do think they need to make a connection where, are they going to show the first half vehicles that are supposed to be released? Are they going to show those in October, or are they going to show them, imminently? I think they need to demonstrate to the market why we believe production's going to grow 50% in the next year. And by the way, I don't think a lot of Wall Street has actually even picked up on that. It's a couple of lines in the earnings deck. I'm not saying it's hidden. We've talked about it, but I'm not sure that either the market doesn't believe it or they just haven't made that connection. But if Tesla showed a really cool vehicle at a much lower price point, I believe the market will then, okay, now we have something, we have product release, we have something to be excited about. So I think Tesla needs to make that connection. And then in the very short term, there's 3 milestones. You have production, delivery. Looks like we're in a stronger quarter, but let's see. Again, macro auto is not. Then you've got the 1010 event, as Christian alluded to, and then you've got earnings just a couple of weeks after that. So I think this is a very interesting period of time. It's all going to play out over the next 8 weeks. And, we'll see how it plays out. But that connection, I think, is what Tesla needs to make, and they haven't done that yet.
Thanks. I'm going to ask Xander, the options bull, the person who I think has one of the people that knows what's happening with the stock sentiment. What do you think, Xander?
I'll pick up where Jeff he used make connection. I wrote down that I want to see a nice vision casting is how I call it. So does my picture look funny, or is it just on my screen? Anyway,
a little fuzzy.
So, a little fuzzy.
Did you say, does your face look funny, or what did you say?
Definitely. We know the answer to that question.
Okay.
But yeah, the tailwinds that are coming, except the R word, having Fed signal dropping rates is, and then start to drop rates, gives a tailwind to the entire auto sector, right? And if Tesla's going to show a new vehicle that is less expensive, and let's say that credit remains, you start getting into prices that open up the market. It opens up, what do they say? Like for every 5,000, it's like an exponential rise in demand. So I think there's a lot going for it. And in terms of the stock, I was talking with my guys today, and we were at the 219 was yesterday. Today the number was 214 that we heard some people saying, and we waited till the end of the day to see what the market does here, and it's really a shakeout. We're recording this on Thursday after market close, so it seems like a big old shakeout going into the event, and with that. Like, do I know what they're going to say? Is there really concern about jobs? I don't know. So, but I went shopping. I love red days. Buying on red days to me is my favorite. So I don't know if I answered your entire question, but I don't. How much downside do you need? How many chances at 200 if you're a long-term investor? I'm starting to convert shares into some of these long, like December 2026, just a little bit, tiny, less than 1%, just a little bit, go and start doing that, because the idea is you want to go down in shares and go up in like 5 or 10% of your portfolio in options, just to juice it. But if it goes down, you're in shares. If it goes up, you're never out of the market. I don't like the idea of being out.
Sorry about that. I have a question to all those who are more in the market than me. I don't follow the market that much. When are NVIDIA earnings? Aren't they due soon?
28.
Next week.
Next Wednesday.
28.
Yeah.
Oh, I see. Okay. Mm-hmm.
Sorry, why did you ask that question? How does
because I think that will have a major impact on the whole AI fantasy.
Mm-hmm.
I mean, there's so many stock that pretend to be AI but are not.
Fantasy?
Yeah,
What?
and I'm not talking about Tesla, but I think there are so many other
Whoa.
stock out there that pretend to be in. Oh, there you go, Jeff. There you go.
Alexandra,
Xander's out.
fantasy?
Where did that come from?
I'm not allowed to say fantasy. Is that? I made Herbert smile. Okay, I'm very happy.
AI is a fantasy? What?
No,
She's calling
Okay.
your Nvidia stock a fantasy, Jack.
not
NVIDIA?
Nvidia. I hope Nvidia is showing solid earnings so that people are back on the AI journey.
We better hope
Nice
AI
nice
is not a
recovery
fantasy,
there.
or the stock market's going down hard if it's fantasy.
Okay, well, that's what I was going to say next is that one thing that all of you talked about is that Tesla is a beta stock, it's a growth stock. It depends on what happens to the sentiment of the economy. We will publish this tomorrow at Friday morning. Fed Chair Powell is going to be presenting at Jackson Hole. What are you guys expecting that he's going to say? What's going to happen? Who wants to start that one?
I'll just start by saying that historically, when the Fed starts cutting, that's actually, I mean, it's mixed, but there's also some pretty visceral reactions in the market. It depends how they cut and how quickly they cut. Remember, they cut. They're seeing deteriorating conditions in the market, so it depends on how they kind of draw out this soft landing window and where they see probabilities and so forth. So just historically, as you know, when they start cutting, it's not always necessarily good news. Now, does the auto market need lower rates so you don't walk into a dealership and get an average new car loan rate at 9.1%, which is where it's at, or a used car average loan rate at 14%? Yeah, they do. But again, from a macro perspective, when they start cutting, it's not always great news for the market. I think every cycle, though, is a bit different. This has been a fairly, steep increase in terms of the rate hikes in this cycle, and I think people have been calling for cuts since March. So this is starting to feel a bit overdue. I know that's debatable, but it's just starting to feel a bit overdue. It really depends on how he starts taking this down. They've been very methodical. I don't anticipate seeing any major surprises from Powell. He's been in this. He's not a Fed chair that likes to come out and surprise you like you're in a haunted house. He really likes to kind of have everything projected out and be smooth. They've definitely signaled that they're cutting in September. Is it 25 or is it 50 in terms of the cut? I think that's what some of the commentary is. I think that's going to be based on. There's a couple of data points, by the way, between now and that cut. We're going to get another labor data point, and hopefully that's a solid data point, and that's not restated 12 times. And then we get another CPI and PPI.
Okay. And then what about you, Matt? What's your thinking?
Yeah, I mean, I agree with a lot of what Jeff said. I mean, all the commentary about Jay Powell's speech tomorrow is really just that he's laying the foundation for a series of 25 basis point cuts. That's what I've heard. I was just looking at the CME Fed Watch tool, and there's a 75% chance, as of the time of recording, of a 25 basis point cut in September, and a 25% chance of a 50 basis point cut. So I think that it's essentially 100% chance of cuts coming. So the question is just how many, what magnitude, and where do we go from here? So I think there's this is one of the few instances I can remember where there seems to be 100% chance of like the Fed's action being somewhere. So it seems very clear that we are finally in this situation where we are going to be cutting, which is you all know Elon's been calling for this for well over a year now. So are we too late? Is it to what extent is it going to is the soft landing still on the table? I think those are questions, but I think it's got to be good news for the market that at least finally we're on this path of cuts.
Okay, 100% chance of cut. What do you think, Christian?
Yeah,
it's good news for Tesla, right?
I agree with everyone what they said. I mean, Jackson Hole, the market's going to whip. I look at the markets every day. I'm trading them and doing all that. So like it'll be a whipsaw. It'll be up, down. They'll be hanging on every word. But to me, like the Fed right now, this market is very difficult. Like the last couple of weeks when we had that big down day, right? Opened up Sunday night, the futures Monday, the yen carry trade, right? People thought it was like recession related, like because we had a bad job print. So there's so many mixed signals. Then we had good retail sales. unemployment claims look better. So we have this like dichotomy of everything kind of looks okay with the economy. And, so why is the market so erratic, right? They don't believe, they're almost like in denial that maybe we raised rates all the way up to 5.25 to 5.5%. And is it possible that we're really not going to go into a recession and the Fed's going to, pull off the soft landing? I think it's almost like we talked about this a million times, and it looks like the market already knows this is coming. So some of this might be priced in. That's why maybe there'll be a little bit pullback on this news, buy the rumor, sell the news, because now it's actually coming. So I do think, though, the Fed's just way too tight. I mean, they got the Fed funds rate, which is the overnight borrowing rate, at 5.25 to 5.5. The two-year Treasury's at 4%. The 2-year leads the Fed. I mean, they are so behind on this. They need to get moving quick. And I agree with Jeff and Matt. I don't think they're going to go 50. I don't think they like the surprise. I think he's going to tee up a 25 for September, but he's got to get rid of the data dependent stuff, because if you keep doing this data dependent, we're going to be whipsawing on every unemployment claims, every jobs number, every little weekly the data points on the economy. We're going to be all over the place again. He has to just commit to say, look, we've raised enough. We're going to start a rate cutting cycle, and he needs to be clear, because if he's wishy-washy or talks about data dependency, to me, the market's going to sell off on that, and it's going to sell off hard, because the market's tired of data dependent and all that kind of thing. For this market at all-time highs, trading at 20 or 21 times, earnings on the S&P, you need a clear Fed saying, look, we're going to cut rates and we're going to get back to a more, neutral rate, because we're very restrictive right now. Anything short of that, and I think the market's in trouble. That's just my opinion on a macro level.
Thank you so much, guys. That's good. Got the brain trust around us. Look at that. Appreciate you guys talking about that. All right. So that is the economy. That is these institutional investors. If you guys want to talk about the troubles that OEM's doing, Alexandra, you put together this table that you've been sharing, and you've updated it recently. Tell us what this is.
Yes, I'm updating this every quarter with the earnings from the top 30 mega caps and the 10, I think this time I had 11 OEMs. These are some of the key factors that the rating agencies look at when they look for the financial strength of a company. And to make it easy to read, I put a color code. So dark green is the best and dark orange is the worst, for 5 different criteria, which are cash to debt ratio, debt to equity ratio, debt to EBITDA, debt to revenue, and the Altman Z-score. So all that to say is the only 2 companies that have consistently dark green lines are Google and Tesla. This has been the case for, I don't know, I think this must be edition 8 of this chart, if not more. All the others have some weaknesses. You see the Apple weaknesses, you see the Lilly and Broadcom weaknesses, and obviously further going down. The rating is still ridiculously too low. We're now low investment grade, Baa3 and BBB from S&P. We should be, in my view, at least AA, but that's actually, I mean, I feel it's important every 3 months to say it again, but it's just, screaming from the mountain to nowhere. So that's why it is. But what is also important is to look at the OEMs. And I think that's one of the things we want to talk about today. So do remember, these are numbers end of June 24. So we're already a month and a half into the next quarter. But their situation is just getting steadily worse and worse. Wow. You see, for example, the only red case in there is the Hyundai case, which they have just enough cash to cover their debt. So that's why that's a 0 ratio, right? Normally, you should have a bit more cash than the debt you have, but obviously they don't. So they're really getting into complicated territory. Now, people argue whether it's a good idea to use Altman Z for traditional OEMs, because they all have their financing arm and obviously function like a bank. For banks, you don't usually use Altman Z just because it's a different leverage model. But I think it's still very interesting because they're just in dangerous territory. You have specific cases like Renault, where the French state will always help and jump in. But you have other cases where it's just less clear. And one of the other cases I want to add some information today is BMW. I think they're the number 3 or 4 of those lines. So they already have a stressful financial situation, not at all comparable with any of the mega caps that are in the upper half of their table, but they also have now today a real inventory problem. So I got contacted yesterday from somebody very knowledgeable in Europe, and I took some notes, so let me please take those, giving me a lot of hints on BMW. And I think BMW is actually a very good example, because I'm sure lots of people that are today on Teslas had in the past BMWs. It sort of looks like a clientele that, had this link to cars and this passion for very specific type of cars. So their inventory levels now are on all-time high, with about 29 billion cars in inventory. And that excludes the inventory that are already with BMW dealers. So they have their own inventory, and then they have the inventory they stuff their dealers with. Then you have in Europe a specific system where after a while the car has to be registered with the state. So initially they try to push the cars to the dealers, but when the dealers can't take them anymore, they have to self-register them because time has come. Now there are about 20 to 30% of their cars that have to self-register just because they cannot push them to the dealers. You have to understand that BMW has now 35 different models. So very inconsistent intra-model pricing between those. They have a lot of brand cannibalization, but also they're still doing everything in different powertrains. So they have ICE vehicles and have plans to continue with their ICE vehicles. They have obviously the plug-in hybrids. They have the ICE platform battery electrics, and they have something that's called FCEV, which is their new pilot program. Now BMW has the selling price, the official selling price is still way too high. They have not done at all the work that Tesla has done to bring the prices down. And so while in Germany, the average reduction that people manage to get when they go to a dealership and negotiate cars are at 17% now. This is not only BMW. BMW is actually at 20%. So it just gets really crazy. And then you have the whole issue with them. What do they do with cars that come back at the end of the leases? How do they account for the heavy losses that these cars incur in the 2, 3, 4 years that they give out those leases? Obviously, you've all probably followed the information out of China, where all the OEMs are just losing grounds, including BMW. So you have a whole shift in the German and European car manufacturing business model. They're trying to now move to direct to customer sales. The dealerships are very unhappy. They're starting to do new deals with dealerships on a commission basis. The commission basis would be 7.4%, if I remember it right. So the whole business model turns away from a traditional dealership model where they had the car in 60, 90 days they had to pay it to BMW. They are now building a commission-based dealership system up. This whole transition brings with it a lot of frustration. And for example, in the Netherlands, the average car is now sitting on a dealership for 150 days. Now, I know you have prepared some charts for the whole industry. It is just incredible what is happening to these OEMs. Now, combine that with the relatively bad financial strength that they have, and the still, high interest rate environment in which we live. Add to that, obviously, that AI and robotaxi are going to advance quicker than anybody can imagine. So they are stuck. They are in a very, very complicated spot in their life cycle. And I don't have any solution for them, but I just want to make sure that people understand how tough it is. Why we like to talk, obviously, about the advance of of Tesla, there's a whole traditional market that is just shifting downwards.
Fantastic. Okay, so I'm going to have Jeff explain a little bit more on top of what you've been saying about the struggles at OEMs. Then I'm going to have a quiz for the other guys, Christian, Matt, and Jeff. If you listen carefully to what these guys are saying about the struggles of OEMs, does that change what might happen to the auto industry? Does that affect the Tesla stock investment, right? So go ahead, Jeff.
Yeah, I think it can. So I think it's naive to think that that you have this inventory building up. You have to go look at the deeper root causes of what could be driving it. I talked earlier about, the average loan rates in the US. The loan rejection rates are at all-time highs. They've only had that metric out, I think, since 2013, the Fed. And it's just been creeping up over time. And then there's a credit availability metric that's had 4 sequential down months in a row, and it's at its lowest point, I think, since 2019. So you have credit, you have credit tightening. You've got loan rate rejections going up, and this has an impact. And of course, the Fed funds rate has been stuck where it is. Now, there's been some improvement in some of the overnight rates, but in general, there's a problem getting. There's not only a problem with the interest rate, but there's also a problem even getting credit. And as you shave percentages off of that ability to get credit, you lose prospective buyers. So I think it's important to look at some of these root causes. The inventory data is interesting. I wish there was a global network where this is properly tracked. This has a lot of manual inputs and manual data sources. Even Cox, by the way, they'll report something one day and they'll change it. They'll change it the next day. It's kind of all over the place. But, in general, this has been on an upward trajectory for the last several weeks and trending higher. And if you look at that dotted line on the left chart, it's been floating above the other years for some period of time, and it continues to grow. And by the way, these summer months, so these are the months where cars are traditionally sold. So you're normally seeing that. Now in the United States, this is a US view. There was a CDK, call it CDK network outage. There was a sales issue and an attack on that network in June. So that certainly contributed to some of it, but I believe a lot of that is burned off. So we need to see an August data point to see where the United States is. I think Alexandra did a great job of going through a couple of data points in Europe. But in general, this issue with access to credit, this issue with the interest rates, it has an impact on the auto industry. And if you look at where some of the major U.S. automakers are at in terms of inventory, some of their most popular models, the Ford models, the F-150, the Explorer, and so forth, this has been widely reported in the last 2 weeks, are all over 100, 130, even 150 days of inventory. Many of the Stellantis models, Chrysler, Jeep, over 150 to 200 days of inventory. So these things will vacillate and move. There's massive, there's so many moving parts that happen once a vehicle leaves the factory and goes into the wholesale network, and you have to track all these factors together. If you just look at one factor, for example, if you just look at inventory, you could be fooled, because what the dealers could be doing is they could be getting incentivized from the OEMs and doing their own incentives to drive inventory down. So that now you have to track average incentive level and look at those. Then you have to look at the average transaction price. So this is one of those things where there's like 5 to 10 knobs. You have to look at everything at the exact same time to really understand what's happening. But in general, inventories have been ticking up, incentives have been ticking up, credit availability has been coming down. And this is an issue, and if they have to do some heavy discounting, we saw this with EV earlier, right? And call it earlier this year, we saw EV doing some significant discounting. Even in the current quarter, there's been some significant discounting from non-Tesla EV, and even Elon has said like there is some impact from doing that. I think the EV portion of it got into it early, burned off a lot of the inventory. You've seen the OEMs, they've publicly announced that they're taking capacity down. I think we'll get into some of that in a bit. And so I think EV entered into it a little bit earlier, but the rest of auto is seeing it. Finally, there was a June data point on United States registrations. And in comparing June of 2024, again, this is registrations. These are cars, these are cars that are bought and registered with their, with the DMV. And those numbers are down 9% in the United States overall. So the number of vehicles registered in June of 2024 versus June of 2023, down 9%. Again, yes, there's that outage that's mixed in there that could make some of the data noisy, but that's down. And then EVs are actually up sequentially year on year during that June to June time period. And by the way, Tesla is about 58% of those EVs shipped. So there's data points out there that say macro auto's in a bit of trouble. Let's see what the August numbers look like. You also have the unions threatening to strike Stellantis if they don't open more factories. Can you imagine? You have the worst inventory in the industry, you're Stellantis, and you've got an auto union with a gun to your head saying, if you don't open these 2 factories, excuse me, in Belvidere, Illinois and Kokomo, Indiana, we're going to go and do a nationwide strike. So there's a lot of factors at play, but if these automakers have to go into heavy discounting, I think there are some implications for Tesla. I think what Tesla is doing right now with interest rates is helping them from a sales perspective pretty significantly in the U.S., and I expect that to continue.
Okay. So this is the quiz for the other 3 here, right? You heard Alexandra talk about BMW and problems in Europe. You got Jeff talking about inventory buildup, some of the issues that these auto OEMs doing. You've got, news that came out. Ford F-150 is officially delayed to 2027. They've also canceled plans for their all-electric 3-row SUV. So does that not? What would happen if one of the legacy auto OEMs, like they actually go bankrupt or they have real trouble or something, just, they just completely just go out of the, I don't know what's going to happen. You tell me, but what would happen to Tesla? Nothing? Because this is, it's already built into the auto market, the valuation of Tesla. What do you guys think?
That's a great question. I could lead off. I struggle with this. We used to talk about this all the time about, this is what makes Tesla stock so hard, because the valuation, you got all these things going on, right? You got the core business of the cars, the growth is slowing, but how much do you give it a higher valuation because there's so much, they have no debt compared to the big 3. They're doing electric vehicles. They're very lean. They're mean. They're very efficient. Do you give them even a higher valuation on the car business than they're already getting, right? If other companies go under. And I guess the opposite to that is, to your question, is what would happen? I think the U.S. government would bail them out, because there's so many jobs tied to that, and there's the unions and politics, whether it be Trump or a Democrat, Kamala, they're going to bail them out. So I think investors would look Tesla in a great way. Wow, Tesla doesn't need to be bankrupt. Their financials are solid. They're putting cars out. They're profitable. So I think that could be a bump to Tesla. I don't think it'll be a massive thing, but I think it'll be this is a solid company that needs to get even more respect in what they're doing in the auto capacity. But yeah, I think they would get bailed out like they got before, and things would keep going.
I agree.
The taxpayers would fund it, because there's no way that the U.S. government is going to let those businesses go under.
I think it will be consolidations both in Europe and in. I don't think they will just keep them as they are, because they're just redundant. I mean, their cars even look like each other, right? You have the feeling that whatever category of car they have, they all look the same. So I would really hope that the government would push them to consolidation, which is actually what happened with Stellantis, right? They became, they're not strong, but they are the second strongest car maker at the moment financially, and that is because of their consolidation. I don't envy them in terms of products and complications and everything else they have under their hood, but the regroupment helped them to strengthen their financials.
Yeah, the problem with the auto manufacturers, they cannot make a compelling EV at a price point that makes money to serve the demand that is there for electric vehicles right now. So there's not enough people that want these. they want them, but essentially they want Teslas at that price point. They're not going to pay 60, 70 on a mass level because the automakers can't make it. So to be honest, we want them to push electric. The government's trying to push them, but if they continue to do this, and you see what Ford's saying, they're not making money. If they keep this strategy of just pushing electric vehicles, they will go bankrupt. They literally will go bankrupt because every car you see they're just getting killed. So they can't do it. And either two things will happen. The government will wise up to say, look, they're trying, or maybe they're not trying, but whatever they're doing, they can't do it. So either we have to help them more or change something, or extend the mandates out more where they can make gas cars or hybrids a little longer. I'm not saying that's a good solution, but literally that would really hurt the U.S. economy because there's a lot of jobs tied to that industry. And if a lot of people lose those jobs, it's a lot of spending power in the rest of the economy. So that's why I think it's a very, hard spot to be in for everybody.
If you look at the Department of Energy's website and you can go and actually look up the amount of loans and grants that are going out to the U.S. auto industry. It's going out to the OEMs. It's going out to some of their suppliers as well. You're talking many, many tens of billions of dollars. In fact, in that Stellantis example I gave you, the U.S. government, not a loan, a grant, they were going to give them $580 million to help them reopen the Belvidere and the Kokomo, Indiana plant. Why am I saying this? The $7,500 credit, which by the way goes to consumers, but allows these automakers to elevate their MSRPs, it's not enough. When they're losing 30, 40, 50, 60,000 and more per vehicle, the $7,500 does nothing for them. So I think the U.S. government misjudged, along with the automakers, by the way. By the way, the automakers were pushing, if you remember, for a $12,500 cut, inclusive of union labor, if it was union labor. And oh, by the way the law is written, it's not for U.S. manufacturing, it's for manufacturing in North America. So cars made in Mexico are covered under this. Unbelievable that these automakers can't figure out how to produce an EV in Mexico with their labor rates and make the unit economics work. But that's where we're at. So the IRA is actually busted when it comes to EV. It doesn't work. Tesla didn't even ask for the IRA. So the $7,500 to consumers doesn't help them with the MSRP. And then the $3,000 battery credit, they haven't figured out how to do high volume battery manufacturing domestically, and they've pulled back on those investments. So that's where we're at. It's not a never, like, will they ever figure it out? No, but it's Ford just told you that they're not even going to make a 2025 or a 2026 vehicle. That they just said, we're not going to do it. And they put internal mandates on themselves. So we're not going to ramp a new vehicle unless it can get to break even within a year. So they're getting tough about this, and it seems like they're getting cover in terms of being able to do more hybrids.
But they're not going to get cover though. Like they're trying to get profitable by 2027 on some of these newer units and figure out some great manufacturing techniques and that sort of thing. Where's FSD going to be in 2027? Let me ask you that question. So you're trying to catch up to Tesla's gross margin potential circa 2011, 2012? Tesla, when they launched the Model S, I went back and looked at all the different 10Qs and all the historical financials. And at worst, when they were doing, I don't know, maybe 1,000 units or something, their gross margin was minus 17% or something like that. And they very quickly, as they ramped, were able to get that to, positive single digits and then teens and then 20s. Nobody else is even close to that. Rivian started at minus 800% gross margins or something insane like that. I forget the exact figure, but it was in the several hundreds of percent negative gross margin. Ford, I think it's a roughly minus 100% EBIT margin on their EV business. We know GM's losing money like crazy. So they can't even get to where Tesla was just on the financial profitability of their core products. Meanwhile, Tesla is going ahead and launching the lowest cost approach to autonomy that's generalizable, and they finally have this approach that's going to scale. And if you actually do the math on what is so it costs them, let's say $25,000 to manufacture one of these cars with all the chips and the sensors that you need for autonomy. We already know that it's cheaper than driving a gas because of the cost of electricity. So the actual just cost of vehicles, whether they're owned by customers and just driven that way, or whether they're operated by robotaxi operators, and like it's just a better experience for that reason. Like, however you cut the math, like Tesla is the lowest cost manufacturer when you look at total cost of ownership. At least they will be with this next generation, and especially if you give them credit for the longer powertrain life that they're going to have relative to an ICE competitor. So it just like they're trying to get to the point where they can be like very small single digit like profitable on their hardware sales. Meanwhile, like they're about to get disrupted in the face of autonomy. So it's like, I think it's important to talk about this stuff, but it's also kind of like, it doesn't matter because they're going to, like Elon had this tweet recently, like anyone who doesn't solve autonomy is going to be irrelevant. And that's the real answer.
It is, but the thing is that they won't die. They won't let them die. It's not because they shouldn't, and they shovel their own graves, but it's our taxpayer money that's going to solve them out.
I have a question about that. So are there strings attached to how that money is spent?
That's a grant given for free.
Well, but
there are.
Yeah. Can you guys elaborate on it?
Well, no, they set up a plan with the loan program office, and there's stipulations around it. It's not like it's just helicoptering in, but there is money coming in, and I don't know. I'm not there watching how it's being tracked, so I don't know if it's on the up and up. But there's a lot of money flowing into these OEMs. A lot.
By the way, and at the same time, excuse me.
I was just going to say one point, Alexander. I apologize. In that Ford update, they are doing $1.9 billion of write-down for EV. 1.9. They're so upside down. They have to do they won't build an EV. They'll do a 1.9 billion write-down rather than build some cars.
Plus, they already announced that in the next couple of semesters or quarters, they're going to pay 3.9 billion of reg credits because they can't get the EVs work. So it just piles in from all the sides. It's crazy.
Yeah, the problem, guys. Okay, so I do not support subsidies. I don't support government bailouts. Problem is, it's a global warfare. Okay, this is not just about American car companies. It's about the Chinese government subsidizing their industry and subsidizing, EV credits for their consumers. In fact, didn't we just do a show, Jeff, where I just found this out. This is new. I found out that in China, they're actually doing cash for junkers. Clunkers. They will pay you for your old gas car to get it off the street so that you can buy an electric vehicle.
That was already the case last year. We talked about that.
I guess
they've increased it. They've increased it.
Okay. But our point is like, holy cow. The incentives and the disincentives, they are just skyrocketing. What happens in the US? 10% electric vehicle uptake while they're already at 50. They have all these companies. They're going to have the scale. They're going to be able to build new technologies, more features.
That's why you have tariffs. That's why you have tariffs. So the current Biden-Harris administration has 100% tariffs on Chinese cars. The Europeans have now bumped them up from 10% to 90% for Tesla and 40% for all the others. But that's how, they're trying to defend their own industry. So they're different stuff. They're the grants, they're the subsidies, and they're the tariffs.
Yeah, but this is not about cars. These are robots on wheels. This is about developing AI. And so when you have smart cars like this and you're funding your industry and you have all these robots anyways, yeah, we all understand this. I'm just saying this is bigger than what we're talking about. We better, as a country, invest heavily, not just in cars, on smart cars and autonomy, but also AI. We got to get their bots.
Yeah. I totally agree. I just got a quick question because I think this is important, kind of what Matt was saying and Alexandra and everybody. Now, I'm not saying Tesla's not going to solve it, but I think it's important at least to just talk about this. And I would love to get your opinion because you guys are very knowledgeable in this. Could there be two things going on here? We see Uber, right? There's a lot of tech bulls and people that even invest in Tesla are still very bullish on Uber, right? Long term, their financials are getting better. They just did a deal with Cruise, whether that's just a headline stunt or whatever. Yes, I don't think, it's going to go anywhere, but we got BYD doing things and you have NVIDIA in there with the GPUs that is trying to do autonomous driving. So two things. And me and Xander talked about FSD getting from 0 to 1. You guys are confident. You guys use the product, and you guys know it's coming, whether it's 6 months, a year, 2 years. I get it. But from a stock perspective, does Tesla, do you think, because we had that big breakthrough, and now it's kind of the chatter has died down a little bit. Do you think they need the new NVIDIA GPU to get to another level, waiting on on Blackwell or Rubin to get even better, that Tesla could use that to get even better? Or do you think that's a non-starter and Tesla could do it by itself? And also, do you worry about other companies getting more greater NVIDIA GPUs with better modeling, better parameters, whatever it is, the technical stuff that eventually can catch up? Is that any bit of a worry in the back of your mind? And I would love to hear anybody speak on it. I think that is really the crux of the argument for a lot of bulls and bears.
Yeah, so I'm happy to take that one. A couple different points there. So one, like the GPUs, are they going to get better and more performant and especially more energy efficient over time? Yes, like that has happened historically. That is going to continue to happen. NVIDIA has absolutely been crushing it with how they've been able to get more compute, with in a smaller package and with less power consumed. So that's definitely the name of the game in terms of these new models. Now, that the kind of life cycle for these, or the rollout is like 18 to 24 months in a lot of cases. So you can't afford to just wait out this cycle and not develop your AI models, especially if you're already behind Tesla. So I think it's not like there's going to be some new GPU that comes out in 2026 that's going to magically solve this. And if Ford or GM invests, I don't know, $1 billion into some GPUs, that at that point, that all of a sudden they'll be able to have something that's just as performant as Tesla. So I think that's a bit of just a misnomer. They're going to get more efficient, they'll get more capable, but you're not going to all of a sudden leapfrog somebody who's been building and iterating on these models for years. The more important point is you don't have the data that Tesla has. So even if you are GM and Ford and you invest in this in this cloud infrastructure, where's my head, in a GPU cluster, you don't have the data. Like you don't have cars that have cameras giving a roughly 360-degree view the way that Tesla has. Not to mention all the onboard control, like the telemetry of what's going on with the accelerator and the position of the steering wheel. So you need all those data points, and you need massive amounts of data in order to feed your absolutely massive GPU cluster, in order to get the great performing an inference model out of it. So that's what Tesla has. They're building this new 500 megawatt data center in Austin, which is just insane. Like that is going to be an absolutely massive amount of compute that they're going to have. And will they have been able to build that more efficiently if they waited 2 years? Yes. But from the business case, you want to use the best technology today to get the best possible result today. And I think what we've seen is that the hardware that Tesla has, meaning like the inference computer on the chips or on the cars, that still has so much more juice left to be squeezed out of it in terms of the software. So getting the models better as quickly as possible, I think, is definitely in the best interest of Tesla. And I don't think there's anyone who can come in and just magically solve the problem of having the AI talent, having the GPU cluster, and having the data set that you need to run all this. Not to mention the power.
Yeah. And I love that. And then just to the other point, anybody could jump in. The Uber Cruise deal. Uber is a big company. It's a $100 billion company. The CEO has talked about Tesla. I mean, he must know that Tesla's in the lead. Jensen Huang talked about Tesla. What is the thinking there? Is it because Uber, the biggest ride-hailing company in the world, can't get along with Tesla? They're competitors. They don't want to make a deal? Because Elon seemed like he wanted to do partnerships. Is Elon not capable of partnering with one of these big guys? Or is it because Elon knows he's going to win and he doesn't want to partner with anyone unless it's on his terms? So, like, what does Uber get out of doing a cruise deal and not going to Tesla and say, hey, your cars are so efficient, you're ahead in this, we want to work with you, we're already on the map, everybody knows about Uber, we're at scale already? Like, what is the thinking there? But why would Uber not want to, deal on Tesla?
So Uber wants to partner with Tesla. When he was interviewed recently, here's August 9th, just a week or two ago, he said there's potentially a big problem with Elon Musk's robotaxi idea. He gave 3 big reasons he thinks that it's going to be hard for Elon to do this. And he said, we'd love to partner with Tesla. So these are two companies that are struggling. Cruise has had to fire their CEO. They had to pull back from some cities because they had some real issues with the safety issues of the cars, and they ran over this person. They just restarted one city to come back. And in fact, today, NHTSA actually they forced them to recall 1,400 of their cars because they had this issue with hard braking. So these are two companies that are struggling. Cruise has basically got hammered in PR that they may not be able to produce this. We found out through the safety investigation that they are, a lot of teller operators are doing it, and there are a lot of issues. Uber is without a dance card. Nobody wanted to partner with them. So you got these two. If you were Uber, if you don't want to partner with Tesla actually did not want to partner with them, is actually what happened. Uber should have partnered with Waymo. Why partner with the least attractive person in the dance floor?
My guess is both of these deals.
Love to hear.
Both of these deals that Uber made with BYD and Cruise were all launched with an intent to get ahead of the Tesla original 8.8 event. Now, this one may have taken 2 weeks longer to get. By the way, we don't know if these are actually signed deals, if these are letters of intent. We don't know contractually what's behind these. But make no mistake, it looks like they were timed to be in advance of the Tesla 8.8 event. I think the difference between these companies that Uber is partnering with and Tesla is, number one, they're trying to gain leverage. They want to be multi-sourced. And so when they get into that conversation with Tesla, they'll say, okay, I have these other options. But the question is the ability to scale. The only other company that Uber could be talking to that you can pull out your phone, push a button, and potentially at some point soon, anywhere in the world, hail a car is Tesla. None of these other companies have a global footprint. So the question is do you have to make 50 partnerships with everybody in different geographies? The one constant is there's an Uber in all these geographies. And the other constant is there are hardware versions of Tesla right now. And if this works and FSD is scaling and becomes a global robotaxi, that will be real competition for them because they will pull out their Tesla phone and hail a vehicle, and they don't necessarily need Uber in that loop. I'd have to think that the companies are talking. The question to me is it's a point of like, where's the leverage at this point in time? I view these deals as more symbolic that they've done to date. I don't know if I view them as deals that can actually scale, but if I'm Uber, I'm trying to protect myself and I'm trying to get these announcements ahead of what Tesla is going to do on was 8.8, now 10.10.
I have something to add here. Travis Kalanick, remember a couple of months ago, we had this discussion that Elon was going to work with him in one way or the other. So far, we haven't heard anything. I always had the opinion that he's not going to come to run robotaxi. I may be wrong, but I just think that somebody who founded Uber is not going to become just one of the, working VPs of Tesla. But who knows? The current Uber CEO, Dara, I guess his name, Karoshakni, whatever. You'll tell me. You'll tell me.
Sorry.
He's a very good poker player. Like you always have the feeling he gets closer to. I mean, the whole Uber story was, should Uber get into autonomous cars or not? Travis was the one pushing that idea. Then the following CEO, when they pushed him out in 2017, said less and less. And obviously now here we are. So I completely agree with Jeff that this is a lot of negotiation power that's happening. But nevertheless, I don't like what Uber is doing here, because we all know Cruise is the subpar option here. But they're making it very glamorous and are trying to sell this as a good idea. So Rebecca Tinucci joined Uber yesterday. I'm very surprised because she was obviously in charge of the Tesla charging team. And I the last issue I thought Uber had was charging. Now her role may be different. It may be more towards the autonomous charging solution or nothing at all about charging. What do I know? But Uber is obviously playing on all sides. And not really clear what the strategy is. I mean, obviously, every Tesla hater will find this wonderful and important, maybe just nothing. And before Uber has cruise cars really traveling around somewhere else than in Arizona and in San Francisco, a long time to go. I mean, they can't even produce a EV right at the moment profitably. So, well, they have a self-driving EV, but there we go.
Okay.
Yeah, it's a good point, Alexandra. And I think to Travis's point, Elon, there was a lot of chatter and excitement that Travis may run robotaxi or something like that. And I think Elon said no, that's not happening, but he could always change his mind. But that's a good point.
I'm going to play a video here of
Been any shift
Uber.
in your mind about robotaxis? You know, there was a period of time we used to talk about robotaxis probably every quarter. The state of robotaxis, where are they? And then we effectively stopped. You stopped that investment as well. Now we're starting to hear, you know, and Elon Musk has sort of been in the background on this, but now he's very vocal about turning Tesla into a robotaxi company, and we're starting to see more technology that seems to actually be working. Do you have a different sort of view about this now?
Well, we think that the autonomous technology brings incredible promise in terms of improving safety, lowering prices, making mobility available for everybody, which we think can increase the overall market share of our services. And listen, I would never underestimate Elon Musk and Tesla. We're big fans of his. They're clearly the leaders in EVs, and we have a lot of Teslas in our marketplace. At the same time, I wouldn't underestimate what we bring to the table in terms of the Uber brand. You know, we're Verb in terms of our matching, pricing, routing technology, our payments, fraud, identity, safety technologies as well. And so as a result, we think we're in a great position to work with any and all AV manufacturers as the technology develops safely, including Tesla, by the way, because what we can bring with this network is higher utilization of AV assets, and we think that's
do you see a sea change? I mean, there are people in the tech world who think that the new Tesla FSD, which is the full self-driving, which is now running off of AI, it's really the major shift in this, that there was a step change in what it's capable of doing, and that we now might be actually dramatically closer than we were a year or 2 or 3 ago.
I think the early promise that we see with newer AI models and imitation learnings, what we call internally AV 2.0, is very exciting. Now, remember, AV had very strong early promise as well. So early promise hopefully will result in faster development, and we'll see how that develops. And again, because of the demand that we bring, we can drive enormous demand to this promising technology. If it develops, we think it'll be a huge positive. It also allows a lot of smaller players to develop this technology. Just like you saw kind of in the early days, LLMs, they're all a bunch of big players, et cetera. You saw kind of open source, smaller models come in. We think the same could be true of the imitation learning models that we're seeing in the market. So it's pretty promising. We'll see how it turns out. We're going to be a player in the space.
That was 3 months ago.
Perfect video for this. Thank you.
Yeah. They're lost, by the way, from at least in their own effort, from a tech perspective. I wasn't aware of a solution that can converge from a power management perspective or performance perspective. And they went out and tried to do various different tech partnerships. They've worked with Aurora and others. I don't even know if that terminated yet or not. So I think they just have a lot of things, spinning at one time. But the question is what's going to converge and by when?
I just have to say, I like Dara. I think he's an amazing CEO, but I just felt like he was saying what he hoped happened, not what was realistic that would happen. Like the idea that you're going to have small kind of startup companies solve autonomy and be just as performant as Tesla is like kind of wild. I mean, the best case in point in this, I think, would be Comma AI with George Hotz. Like they legitimately have, I think, a really great system considering how few resources they have and how few vehicles they have on the road. But like they can't really handle turns right now. I think they've been working on that. I probably should brush up on the latest, but like Hotz himself, he's very forthcoming, and he's like, we're we're like well behind Tesla, but we think our approach, because they're actually following the same approach that Tesla is the right one. So like the fact that you're just, or the notion that you're going to get open source models when nobody has the data, like that's the biggest thing that's different from LLMs, where anybody with some AI chops can just, download a bunch of text, terabytes of text and train a model based on that. You can't do that in autonomy. So I just think like he's saying like, oh, like maybe Tesla has achieved some big breakthrough, but there was early promise before and it didn't really pan out, and that might be the same thing happening today. And there's other players who are going to emerge, and we're going to help them sell a lot of cars. Like that's what he said. But I think if you actually sit down and think about that, I view the vision that he painted as extremely unlikely to pan out.
I saw it as, let's analyze what he said. Number one thing he said was brand, and they bring a verb. Really? That's your selling? All right, Matt gets it. That's what you're selling me on. And then oh, we can increase the utilization. The reality is, this is how I took it. It's stock stabilization. That's what he's doing. Is he's trying to make sure that the market, people like us, don't go and short Uber, and don't put downward pressure on it, because Andrew Sorkin, I think that's his name. He gets FSD. He got that it's a AI written 300,000 lines to 3,000 lines, and did you guys see the cooling towers outside of Austin? Like, this is mind-blowing stuff. Where's Ford's? Where's GM? Where's the competition? Oh, the competition is coming. No, it's not. The competition is not coming. It is. What is it? China. And if there's all of, you guys are just incredible wealth of knowledge, and just the tariffs, the encouragement from the government, I just don't see it. I really don't see it. Why does Tesla need anyone? Tesla wants to have vertical integration. They don't need partners. Who are they partnering? They buy people out, right? They need a piece of tech. For the batteries, they bought the manufacturers that have the tech to do so. So I just think that's where where it's going. So I don't buy any of it. To me, it's just talking stuff. Just fun to talk about.
Yeah, I agree. But the funny thing is, you have people.
I love that. That was great.
Yeah, I mean, I agree. I think Tesla's in the lead. It's just getting from 0 to 1, right? Actually getting it to work, getting the network up. So I'll just say, just to make an interesting conversation, the one thing Uber does have, it's not the technology, it's they have scale, right? Uber has been around in the game, and I think the ride-hailing network that they provide is a service that I don't know that even if you had a robot, I still think people would Uber, right? I mean, I don't know how long it would take them to go out of business, because Tesla would have to really scale to millions and millions of vehicles to just put them out of business overnight, right?
They have market penetration. Yeah, they have market penetration. I'll give them that. But if you just step back, who has the best software imaginable? So what do they have that Tesla can't replicate on their own?
I'm just making the point that so much is in the financial world with investing. I'm bringing it back to investing, Tesla stock and other stocks. Why is Uber stocks continuing to grind higher? Right, their financials are getting better, and Tesla's kind of stuck, right? Because you have investors like Brad Gerstner, who recently invested in Tesla. I love it. Love the Cybertruck. Who recently invested in Tesla because of autonomy and that great, the great things to come. But he's still a big Uber investor. So you got these investors on the one hand. Again, I'm not saying they're right or wrong, but I'm just saying it's interesting that understand or appreciating Tesla, what they're doing, the autonomous, the lead, the network. But they're also big investors in Uber. And they believe in the Uber story. So it's just a dichotomy that I find interesting. And I don't know, I'd love to what you guys think about it, other than just, Tesla's going to win and it's over. There's a discussion there to be had. Yeah.
It's going to come down to a utilization. That's why you heard Dara talk about this. You'll hear some of the other hedge funds talk about utilization, because that's what drives that cost per mile up or down pretty significantly. There's also structural cost advantages as well. Like if you can design a robotaxi system without a driver. You're going to have a structural advantage at some point when you get that to scale. But I think what's going to happen is Uber is going to have multiple partners. Some of them are going to work better than others. But at some point when they do partner with Tesla, you're going to have this load sharing or for utilization. And if they can get their utilization up on their vehicles and on their network, they're going to be in good shape. And if Tesla has a much better mousetrap and doesn't lock them out for some reason, then they're going to do fine. And it's going to help Tesla actually scale as well if they could do some form of a partnership. But what disrupts the Ubers today would be a highly disruptive cost model and an actual cost. And if Tesla could do that, that would be disruptive. But I actually do see them partnering, again, just on the utilization side. I think that's going to be the highest order bet in any kind of network like this.
Okay. So Alexandra asked me to show the tweet. So first it started off by Sam Kors from ARK Invest. He said, thoughts on where people mess up comparing the difficulties of the Uber rideshare model and theoretical robotaxi model. He thinks that people think that that people underestimate the cost and complexity of getting drivers. Drivers won't offer their car to robotaxi fleet and peak demand problems. And then I think Brett Winton, who's also with ARK Invest, said, I think that people underestimate the operational complexity of Uber's model relative to Tesla's positioning. So it's not going to be as hard as you think it is. Recruiting drivers, qualifying these cars of varying quality, trying to get quality assurance, appropriately incentivizing, retaining drivers, blah, 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 blah. And of course, the Uber Eats, all of this is massively costly, labor-intensive on-the-ground operations that Tesla conceptually has a much higher lift. And Elon said, yeah, that's correct.
And it is, because you have to understand that in a year, in 2 years, you will be in your Tesla, in your town, and there will be a message saying there, currently need robotaxis. Do you want to send your car or on your phone or wherever? So the interaction between the scheduling and the car and the owner of the car is infinitely more simple in a Tesla model than it is in an Uber model. You don't have this whole infrastructure of drivers to manage. You don't have to have this disponibility issues to manage. And I mean, if anybody doubts that Tesla will have the best software for that, look at the car now. There can't be any doubt. Before anybody comes even close to that, let's not even talk about capacity to drive by themselves.
We got a quiz for the panel here. Whoever gets closest, I'll give a T-shirt. I'll send you a T-shirt, okay? How many Uber drivers are there in the United States?
Ooh, that's a great question. I could guess, but I don't know.
Guess. Go ahead.
Okay. I'm going to sound like an idiot because I'm just going to make up some quick number without thinking. 5 million. I don't know. 5
million. Matt.
I need a second. I want to.
Nobody better be checking the GPT or something. Only I can see Alexandra. Keep your eyes straight. Hurry up.
I was going to guess 3.
3 million. Jeff.
1.6 million.
Alexandra.
1 million.
It's Matt.
All right, I'll take the over. I'll go. What is it? 7?
Okay, no, it's 1.5 million drivers in the United States. Okay, so 1.5 million working in the United States. Guess how many Tesla cars there are in the United States, Christian? Because you're the one worried about this.
What's it, like 3.5 million, 4 million, 5 million?
Actually, I don't know. How many Tesla cars are there in the US, guys?
I think it's somewhere between 3 and 5 million.
Wait, how many? What's the question? How many Tesla cars are there?
Yeah, in the US.
With full
about
830,000. It looks like. No,
it's
gonna be more than that.
More than that.
2 million.
3 million.
2 million. With full
It's over 2 million.
Okay.
That's North America, by the way.
But probably not all with all full self-driving capacity.
Right. But okay, so I mean, we're
subscription.
We're close.
Right. That's a good point. Yeah. So scale. Right. If they can get it, scale. They could scale quickly. Now the question is, how many of those Teslas go into the fleet? Because is it 50%, 30%?
Hold on. Doesn't matter because you're if you own a car, you're going to want to use it during rush hour, but that's when the Tesla fleet steps in and they utilize their cars then, right? They supplement it. And so I don't think about it like that.
Well, you have to.
Well,
like, how are they going to
agree,
make
but it
money?
matters
It
to the-
depends how many cars
to
are on
the
the
scale.
network.
If they get it to work, they then got to make a lot of money. So they got to scale it up, right? And if you need if there's only so many Teslas around until they can scale up to, in certain parts of geographies, you're going to take an Uber. You're not, because there's no Tesla around, maybe, right? Tesla's still early in the game of, they're getting there. But I think in 5 years, 6 years, as long as they can keep producing, 2, 3, 4 million a year, yeah, then they're going to be there. They're going to be.
And that's actually a good thought process, because remember how Elon was all upset about Apple and Google Play taking 30% and then later on, whatever, 20%. I want to see how much Tesla is going to take on those car revenues, right? I mean, as a shareholder, obviously, I want them to optimize on it. But as a car owner who may put my car in the fleet, I want to see a maximum produced out of it. So I think that's going to be an interesting thought process.
He did say majority of the money would go to you. So definitely more than 50%.
That's the case with Apple as well, right? That's
right.
70-30.
Right. But I think it's not going to be a static situation. It's going to be surge pricing, just like, if they have an undercapacity from the Tesla fleet and tying Jeff's question of what is this 50% increase for next year? Is it for auto for consumer, or is it auto created for the Tesla side for their own robotaxi fleet?
Which has always been my point. Why would you sell cars still? I mean, I know, Herbert, we don't agree on that one, but
I've been saying
we
that
do.
they would never sell cars.
True,
I'm sorry.
right.
I've been saying that for years.
Because why would you
hammering
sell a
them.
car if that's where you get the most margin out of it? But again, I don't know how I will react if on Robotaxi Day they will say it's going to be 30-70, because I feel a little bit like, okay, well, you're jumping on the same bandwagon that we all don't like, but we'll see how much it is.
Well, one's an app that goes on your phone, and another one is a vehicle that has to be maintained, controlled. So it'll be an interesting conversation of what the cost model looks like.
Exactly. And also what will happen with insurance. Will those trips be insured differently? Is it still on the car owner's insurance? I mean, there are so many questions. But I mean, closer we get to October 10th, more questions I have.
Tesla's already covered.
That's why me and Herbert agree that humanoid Optimus bot is so much cleaner. It's so much cleaner. Less questions. We got a robot and it's going to do you.
I don't agree with that.
So much cleaner.
I don't agree with that.
That's okay. I just think it's cleaner.
Okay, Jeff. What? All right.
Huh?
You're
gonna have some robot with 6 eyeballs walking around your home?
6.
What are you wearing,
It
Herbert?
looks like us. It's
better than other balls, right?
Eyeballs.
As long as it's only eyeballs.
Dude, you already have 1 million robots in your home. They're called security cameras. You got the telephone, the TV's looking at you.
Jeff,
if you
that's
own
right.
a Samsung,
Sorry,
they're already staring at you and recording that all day long. So
go to an Amazon warehouse. They got robots doing everything right now, and they're not killing anybody. They're moving packages. They're
I agree with the
complaining.
industrial
They're not
side.
taking
I agree with the
breaks.
industrial side. I'm talking about for the home.
It's easy. Not easy to accomplish, but the use cases are abundant.
Okay.
No, I agree industrially. I do.
So what happens to that birth rate when the robot can make a sandwich?
The birth rate's already done. We're all ready, except for Matt. Matt's trying to do his best to keep it going.
Herbert, this show has to go on later in the evening if you want to get
I'm not going there. I'm not going there.
Matt has seventh on the way, right?
Matt
7th
and
on the
Eli
way,
are
yeah.
losing the battle.
The future's going to belong to my clan.
Can't
The
keep
Smith
up.
clan, which is already the clan that's out there. Okay,
You
whatever.
outsmith me. My gosh.
Smith me.
It's like Elon said, and it's true. The wealthier we get, you would think we would have. It's the opposite. You get so wealthy and so comfortable, you don't need children. Like back in the day when you needed to do farm work, you needed a lot of kids to do the land, to do this and help out. Now once you have everything, and robots are going to make it work, you don't need anything, right? So everything becomes self-indulgent. Everything becomes, and you don't want a child is almost a bother to you. I'm not making a judgment. I'm just saying in a lot of people's minds, children become, because they're all about themselves. And
I'm going to jump in because I want to tell you a complete opposite theory, which is when are the most babies born or most conceptions happen? January, during the winter, when everybody's stuck inside the house and there's a winter storm and then they have babies accidentally, whatever. So yeah, when robots come here, you got nothing to do.
Well, it's also the
but we've had a lot of winters and the birth rate's going down.
Yeah, but hold on. It's there's a lot of pressure on society at the moment, but once you kind of get to if this plays out, the age of abundance where you're not fighting over resources and everyone is taken care of, your basic needs are met somehow, right? Like, what are people going to do? That's when the art is created. That's when you're semi-retired. Like I finally have those feelings of like I can see well, what am I going to do today? It becomes not about making money, and if the money problem is solved, when Elon says, what does money even mean when we get to this, to this scale of automation? Our time is freed, and what do we do with that time? I make a joke about it, but really, I think I don't see any other path.
And maybe I'll be an optimist. Maybe it will reverse. Maybe, humanity will come back and say, hey, we need to do this. We got to keep going and reproduce. So I'm not saying it's hopeless. I'm just saying right now it looks pretty dire.
Well, governments will actually subsidize becoming parents
government can do incentives.
Because they will have the money to do it. I think we'll enter into an age of abundance, and they will understand that they're just not sustainable with these birth rates.
Christian's correct, though. Why would a government subsidize that? Today, they're doing it because they need the workforce, the labor workforce. If you don't need the labor workforce anymore, what's the reason for a government to subsidize
otherwise
birth?
in 2 generations, you're done. That's it. The whole country is done.
Maybe the governments don't care, but yeah.
Oh, well, they do. Believe me. They still want the taxpayer.
Well,
and who's going to vote for them?
They still be taxed.
Exactly. Exactly. Who's going to put those ballots in the box?
Hey, if there's only so many people, they just need to get X of so many people and they'll get voted in.
I don't know what happened to this conversation, but thank you guys very much. That was a lot of fun.
That was me.
Yeah.
I did it.
Oh. That was good.
No,
okay.
very, very, very good intellectual
Xander's
conversation.
bot
I enjoyed it.
fantasies took us down a rat hole.
Now, Herbert, tell us why you were laughing in the background. Tell us about that, Herbert.
We may never recover from this.
What happened to you?
Because of the private jokes that you guys were sending me is hilarious. I had to get out of there for a while. All right. There's so much to talk about, but we can move on. For example, I just learned I've been saying Alexander's name wrong. I've been saying Jeff's name wrong. I think the only person I can say the right name is Matt Smith. Matt Smith.
7 out of 10.
7 out of 10 on that one. Apparently, Xander Sky is not his real name. And I don't know if only a couple of you might know that.
I knew that.
Ong is not my real name. So
really?
See?
Man, I didn't know that.
One day I'll tell you. I'm sure I told you a story a long time ago.
That's not quite true. That's not. Go ahead. Tell us.
What? We're out of time.
Is your real name Dong?
Nicely done. But
so is your real name very different from Ong?
Yeah. Okay. The story, I guess, is that my parents or my grandparents, my great-grandparents, one side of them, of course, immigrated away from Fukien province in China. In order to go to the Philippines, you had to be a family unit. And so my grandfather was a 10-year-old. He pretended to be the son of his sister. Sister's married to an Ong. So we became Ongs. But our actual name is Gui, G-U-I.
But in your passport, you're not called Ong.
No, we're called Ong. We're called Ong at this point. Yeah.
So it is your real name. It's just there's a story to it. Okay.
Yeah. One point, it wasn't our real name. So, and then I found out that Ong is actually, if you look it up, it means royalty. So I thought, oh my God, I'm descended from royalty. I looked it up some more, and I found out in China, you are not back then, you're not a person, you're an asset. And so I could have just been a grandfather. It was like, sweeping the grounds, and they're called part of the royalty owners.
Well, what's funny
and since
about
we're on
Herbert
historical,
is the other
means
name.
valiant.
I was going to say the other name, Gui, means expensive in Chinese. So you're definitely an asset.
Yeah. Oh, you're a financial bull. That's all you think about. Plus and minuses.
I miss these intellectual conversations. Wow. I mean, this is just awesome.
It went off
Did
the
you ever
rails a
do?
little bit.
Did you ever do those tests where they pretend they know where you come from and the percentages and all that? And did that
Not
work?
yet.
Ancestry.
I think we should exactly. I think we should send you one. I would be very interested whether they find that.
Well, you'll find out that I'm actually French. I got French.
Okay. You're cut.
Yeah, I got 12% French. So there you go. All right, guys. See you soon. Bye, everybody. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.